If you want an account where you can spend, save and invest everything in one place while earning 8 times higher interest rate than the national average, or you're just tired of paying ATM fees or foreign transaction fees, a Fidelity Cash Management Account or CMA can be a good option for you. So in this video, I'll explain what a cash management account is offered by brokerage firms like Fidelity, what are the key features of Fidelity's cash management account or CMA, and whether you should leave your bank account for Fidelity CMA. Let's dive into that. For those of you new to cash management accounts, let me explain what it is. So a cash management accounts or CMAs are like a hybrid checking and savings account usually offered by brokerage companies like Fidelity, which allows you to save, spend, and invest all in one place by combining features of checking, saving, and brokerage accounts. They generally offer competitive rates while the money is still accessible whenever you need them. Now let's look at what are the features of a Fidelity Cash Management account. First of all, it is FDIC insured up to $4 million if you use their FDIC insured deposit sweep program. With the Fidelity Cash Management account, you can choose to have your funds in their government money market fund or SPACs, which yields 3.29% currently. You can also opt to park your Fidelity CMA funds in their FDIC insured deposit sweep program, which has a 1.84% APY currently. Now, personally, I prefer to keep the money in a government money market fund because it pays 3.29%, which is 8 times higher than the national average rate of 0.49%, and cash is liquid and easily accessible. But Fidelity's government money market fund is not covered by FDIC insurance and therefore subject to market risk. However, as a security in your account, the fund is covered by the Securities Investor Protection Corporation or SIPC, which will cover up to $500,000 in securities, including a $250,000 limit for cash held in a brokerage account such as the Fidelity Cash Management account. But if you're not comfortable with this, or you're one of the luckiest people on earth who has more than 500,000 in your Fidelity CMA, then your only other option is to park your funds in their deposit sweep program. As I mentioned earlier, this option means that your funds are FDIC insured up to $4 million, and Fidelity is able to provide this high level of coverage because they automatically place your cash in an account at one or more program banks such as Wells Fargo, Citibank, Chase, etc. So for example, if you had $800,000 in your individual Fidelity CMA under the deposit sweep program, Fidelity would spread that $800,000 across 4 or more of the program banks they work with so that they can keep you under the $250,000 FDIC limit per program bank. But keep in mind that it offers currently 1.84% APY, which is still much lower than other high-yield savings accounts, which are offering between 3 to 4% currently in the market. One of the great things about earning interest with the Fidelity Cash Management account is that it's all automatic. You get paid the interest you earn on the first day of every month as a dividend, and that money will be added together with the rest of your funds and earn interest as well. If you need to spend or pull your money out, you don't have to switch the money sitting in your account from a money market fund to cash. Whenever you need to transfer money from your account or need to withdraw money using the ATM, it converts what you need into cash immediately. While the world is becoming increasingly cashless, physical currency still has its place. According to CNBC report, in 2025, over 80% consumers paid for at least one purchase a month with cash money. While withdrawing money from an ATM is easier and faster than a trip to the bank, if the ATM machine is outside your network or you're traveling abroad, you could be paying for the privilege. In 2025, average fee for out-of-network withdrawals was a record $4.86 per transaction. While that might not sound like a lot, it may add up if you're not careful. What makes Fidelity Cash Management account different from other CMAs is their unlimited ATM fee reimbursement globally. Unlike other CMAs like Wealthfront Cash account, which charges 2.75% international transaction fees, or Vanguard Cash Plus account, which does not provide ATM card at all to withdraw money, this feature of Fidelity CMA alone can save you hundreds of dollars, if not thousands. Many banks charge customers for using an out-of-network ATM. The company servicing that ATM machine may also charge you an additional fee. Let's say you're a Bank of America customer who uses a non-Bank of America ATM inside the USA to withdraw $200 cash. So Bank of America will charge you $2.50 and the ATM provider charges you $3 per transaction. So you would pay a total of $5.50 fee for withdrawing $200 cash. If you need to withdraw cash 2 times in a month, regardless of the amount, then you would pay about $132 ATM fees per year. And if you use this card abroad to withdraw cash from an ATM, then you would pay a $5 fee plus 3% foreign transaction fees, which is another $6 for withdrawing $200 cash. So you're paying at least $11 fee for withdrawing $200 cash abroad. And if you withdraw $500, you will pay a total of $20 fee per transaction. In addition to that, some ATM owners may charge you their own fees. With this Fidelity debit card, you will get refunded for all ATM withdrawals regardless of what ATM you use, where you are in the world, or how much cash you withdraw. You would never have to worry about any kind of ATM fees no matter where you are in the world. This card is helpful for me as I traveled to Europe a year ago and I did not have to worry about what an ATM machine would charge because I knew that I would get reimbursed. Please note that even though Fidelity does not charge foreign transaction fees, if you choose to pay for a debit card transaction in US dollar, your transaction may be processed at a rate different than the market exchange rate. For example, if you go to Italy or Portugal and you use your Fidelity Cash Management Account ATM card to pay for something in euros, the exchange rate that Fidelity uses for currency conversion may differ from what you might see in a currency exchange or online. Fidelity also offers multi-factor authentication to keep your money safe and secure from scammers via authenticator apps, which adds a layer of security to online accounts by adding a verification step beyond having just a username and password or text message to your phone number. This extra step at login not only helps prevent scammers from accessing your account and data, even if they somehow manage to get your login information or SIM card control, it can also give you a heads up if someone is trying to log into your account without your permission. Once enrolled, you will be prompted to enter the time-sensitive code from your authenticator app after you enter your username and password when logging into Fidelity account. This account can also help you in your wealth building journey, allowing you to save so much time with the power of automatic investment or recurring investment. Let's say you want to buy a few stocks or index funds on a regular basis but don't want to go through the order process every single time for every single stock or fund. With Fidelity, you can set up your account where it would automatically buy one or more investments on a set schedule like bi-weekly, weekly, or monthly. The recurring investment will happen automatically every month until you decide to stop it. You can also set up the automatic transfer of money from an external account on a weekly, bi-weekly, or monthly basis. Let's say you get paid bi-weekly at work or you have a business where your money is coming bi-weekly. So you can set up a recurring transfer rule in Fidelity where you can set up a Fidelity account to take a set amount of money from the external bank account that receives your paycheck or income and transfer the funds over to your Fidelity account automatically. If for some reason you don't have enough money in the account for the automatic transfer, the transfer will fail for the schedule without incurring any fees or penalties. Fidelity's cash management account also has other standard features that are offered by traditional banks, such as free mobile check deposit and mobile bill pay via the Fidelity mobile app. It offers free online bill pay, free check writing, and free online transfers between your Fidelity accounts and other external bank accounts. Now that you know all the features and benefits of Fidelity Cash Management Account, should you leave your traditional banks for Fidelity? Here are the 4 reasons why you should still hang on to your traditional bank accounts. 1. Physical branch locations. Some of us still like going to a bank branch and experiencing the face-to-face interactions with bank associates. But Fidelity branch support is hard to come by as there are only about 200 financial planning offices scattered across the country. 2. Sometimes there are longer hold times on deposits, especially on certain incoming checks and EFTs for your accounts or when Fidelity systems detect unusual patterns or activities. 3. If you want to pay friends and family in minutes, Fidelity allows PayPal, Venmo, Apple Pay, etc. but does not support Zelle in the account. 4. If you want to connect your account to your external accounts immediately or instantly, Fidelity does not use technology platforms like Plate, which offers extensive coverage across US banks and credit unions covering 11,000 plus financial institutions. Instead, it uses MasterCard Data Connect, previously known as Finicity Connect, which has excellent coverage for traditional banks but weaker for fintech apps and new age neobanks. So I hope this video is helpful. Please do not forget to subscribe and share, and also please let me know in the comments below what you think, and I'll see you again in my next video.